in a consolidation period for both gold and silver. What are the exact ranges? I don't know. And they'll vary. It's not like a perfect channel formation between 2,200 and 2,400 for the next 3 or 4 months, but something like that for gold. And silver, obviously, it's gotten below 30 now. So, maybe 29 to 31 in that range. Will it go below 25? I can't say it wouldn't. I doubt it, but it could. But basically, we're doing a trading range. How big or how wide is that trading range? I'm not sure. How long will it take? I don't know. But my guess is for gold, couple $300. For silver, $3-4 probably. And I think it'll just go into the late summer. So September, October, I think we'll start the metals regain traction.
Renowned financial analyst David Morgan expresses uncertainty about exact price ranges, but believes gold will fluctuate between $2,200 and $2,400 and silver between $29 and $31. He firmly states that precious metals will regain traction around September or October. In terms of fundamentals, David Morgan says the market is very interesting. The fundamentals are improving, making a solid case for owning gold. Central banks, considered the smartest money, have been deliberately moving into gold. Global demand for gold by central banks has doubled since 2022, from 11% of total gold demand in 2021 to 23% in 2023. This trend continued in the first quarter of this year. Investments in bars, coins, and ETFs, which had increased significantly in 2020, have since decreased significantly. On the silver side, Morgan observes that retail investors have largely stayed out of the recent move. Many bought silver at high premiums and are now cashing out at break-even or slight profit. Furthermore, Morgan notes that the wholesale market is seeing more sellbacks than buys, but he believes the market is still fundamentally bullish. He points out China and India's strong participation in investment and industrial use, especially for solar panels. Morgan predicts a consolidation period with a trading range, but he maintains that the fundamentals continue to improve. Investors questioned silver's ability to hold above the psychologically important level of $30 an ounce, reducing the net speculative longs by 4,000 contracts to 37,700. Nevertheless, bulls may not fuel the XAG USD rally, leading to an increase in white metal-focused ETFs. Coupled with strong demand from India and China, this will reduce onshore reserves and push prices even higher. According to TD Securities research, growing demand could wipe out reserves in 12 to 24 months. Now, we present the clips of David Morgan's insights from his recent interview with Liberty and Finance. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Well, let's start off the Commitment of Traders report. I'm pretty good at reading it. No one's got it exact, but you can see the trends are pretty obvious if you studied it for very long and a half of years. I just took a look at it. The open interest really hasn't dropped that much on the last report. So, and the way it was stacked up just a few weeks ago, it was indicating that the metals had reached a peak and were on the decline. I mean, my friend Chen Lin is very smart and very good. He saw room for it to expand, for open interest to increase. And he was right. It had the potential to do that. But the way I saw it was seeing the same thing and seeing it differently. I thought we were close enough to what we considered to be the max participation for longs and shorts. And basically, when you get to that high level, that's about all she wrote. And you're going to see a correction in the metals. And the game is going to go down to a certain level in the open interest. And once it achieves that, we'll start back up. And it's not a perfect timing mechanism. It's more like a barometer. It gives you a very good signal of what's ahead. You just don't know if it's a day, a week, or a month ahead or 2 months, but it's okay, we're pretty much topped here. So that doesn't surprise me. As far as the fundamentals go, it's a very interesting market because the fundamentals, as you well know, viewers know, we are at a point where fundamentals continue to get better and better. Not only the reasons to own gold, as we just outlined, but the fact that the central banks are leading the way and indicating that the smart money or smartest money is and has been moving into gold in a very deliberate manner. On top of that, if you look at the silver side of the equation, retail's pretty much been left out of this move. A lot of retail said, okay, I got $30 silver or $31 silver. I paid a very high premium months ago with silver's at 25, and it seemed like the retail market was extremely tight and premium shot up and paid $30 for $25 silver. Well, now you can go and cash out at break even or maybe a slight profit. Maybe you bought too much. Maybe you don't believe the story. Maybe you just want to rebalance your portfolio. Who knows? But the facts are that the wholesale market is getting more sellbacks than buys from three or four that I'm very familiar with and can call and get direct information. But that doesn't mean that the market isn't fundamentally more bullish. And this is what we're seeing on the industrial side and the investment side outside of India and China. I mean, China has caught the silver bug, and their investment community is certainly participating in this rally, as well as the industrial commodity for use primarily in solar panels. And the same thing holds for India. So it's a very interesting market at this time, but the strength is still there. I'm not taking back what I said. We're going to consolidate. We're going to be in a trading range, but the fundamentals continue to improve. You're falling into a typical bull market. And the bull market, as we've discussed before, shakes off as many longs as they can. And this is one of those shake-off points. People that have, maybe they bought it at 18, maybe they bought it at 20, a 10% gain on that investment, that's 30-40%. Again, a lot of people, and what I've seen, and of course I've been around a long time, but it's just my own personal experience. Once they learn the truth about how the monetary system works and what a scam it really is, where a few get to dictate the money power over the many, I've seen it many times where they kind of overdo it. They get it, they understand it, they verify it, they've educated themselves, and it is the truth. And it is a very unfortunate situation. And I'm gonna make it right for what I can control. That's me and my personal finances. So, all my available cash, I'm moving into gold, whatever. And that's an extreme example, but a lot of people do go overboard. And when I put out the 10 rules of silver investing, which could apply to gold investing, apply to other investments actually in some cases, but the idea is to take a long-term view, dollar cost average. And then I said in that rules, I forget which rule it is, but something like too much of a good thing is too much of a good thing. In other words, I was recommending a certain percentage and not to go overboard, because you don't need to go overboard to have a hedge, a balance, and almost a certainty that you have prepared yourself financially for probably a worst case scenario.
Reflecting on his decades-old 10 rules of silver investing, DavidMorgan says these principles remain highly objective. Morgan questions what a little silver means, noting that even small amounts are too precious for everyone to own. He predicts that if every American had 500 ounces, it would quickly deplete the silver supply. Silver prices reached an 11-year high on Monday, driven by economic data that has strengthened expectations for interest rate cuts by the U.S. Federal Reserve. Recent inflation data has contributed to this bullish outlook for silver, with traders focusing on the Fed's upcoming policy meeting minutes for further guidance. Regarding current tensions, DavidMorgan expresses his disheartenment as an American. He emphasizes that adhering to the Minsk agreement could have prevented the situation. Looking ahead, he predicts potential retaliatory strikes, stressing these are genuinely concerning times, not mere fear-mongering. Let's get back to the interview.
You look at those 10 rules of silver investing. I'm speaking about, words I wrote on a piece of paper, 2 decades ago, but I think it's very objective as far as why you want to have some, why you don't want to overload, why you want to do it over time, why you want the discipline of a dollar cost average, and all of that. And 10 simple rules. It wasn't as if, there's a great deal of thought in it, and there was just a principled approach and being, again, objective to try and help everybody. Because, the adage that you'll hear from, a lot of dealers, I won't say that Miles Franklin says this, although Andy may have said it, but, in the old days when I got started in precious metals, it was, everybody should own a little. Well, who's everybody and what's a little? And I did a video on that called Missing the Silver Market. You can watch it, look it up on my YouTube channel if you wish. But not everyone can buy a little bit of silver. It's way too precious. What is a little? 2 ounces? 2 ounces is not going to protect your financial stature. You're going to need, depending on your lifestyle, your income, all that. But I would suggest probably, 100 ounces at a minimum, if not closer to 500 for the average, American that's able to save. And I know there's a lot of people that can't. I'm certainly, empathetic about that. But, if everyone in America had 500 ounces, you'd wipe out the silver supply very, very quick. And I really feel disheartened because really, if you go back to the beginning, if we just held to the Minsk agreement with Russia, in other words, had we, the United States, kept our word, we wouldn't be where we're at right now. And we probably could go back to saying, well, we screwed up and we broke our word. We're gonna make it right. We're gonna live our word. We're going to go back to that agreement, probably end everything. And yet here we are contemplating that fate of our future is potentially, I'm not going to say absolutely, but potentially in the hands of a foreign country that might use U.S. weaponry into Russia, hit a target that's of such high value that they are compelled, from their perspective, to retaliate. And this is very scary times. I really don't even like saying it, because there's still some amount of people that just absorb the mainstream media, and maybe they'll stumble upon this channel and realize that this is no joke and this is not fear mongering. You should be scared. You should be really scared, because when you have the fate of a potential strike from Cuba to the East Coast of the United States, that's 12 minutes away, and you can't do anything about it with a precision weapon that's very, very precise. Sitting there, if you're not scared by that, then, what is fear mongering?
The gold and silver forecast remains positive, and we reckon new records could be set for the former and fresh 2024 gains for the latter. With gold and silver hitting new highs and demand outpacing supply, are you considering adding it to your investment mix to hedge against inflation and economic uncertainty? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.